All right, let's get started with this webinar. A pleasant good morning, afternoon, or evening to everyone, depending on where you are joining us from. I'm Peter Rosenkranz, an economist at the Economic Research and Regional Cooperation Department of the Asian Development Bank. I will be the MC for today's webinar. Thank you so much for joining us for today's dissemination of the ADB-OECD report on leveraging technology and innovation for disaster risk management and financing. We will start with several remarks, after which we have a presentation on the main findings of the report, followed by a wonderful panel of experts. We very much look forward to today's rich discussions. Just some quick house rules. So this is a webinar. So we will be always, the ones who speak will be spotlighted and have also their camera on. And for all participants, you can use the Q&A function to pose questions. In particular, during the panel discussion later, there will be also a dedicated portion for Q&A. And you not only you can post questions through the Q&A, you can also like them. So when you like a question, please click on like, and the ones that are liked the most will be also shown on top. And the moderator can then consider those questions that are on top. So without further ado, let's get started. I'm most pleased to introduce Dr. Jessica Zawada of ADB to deliver today's opening remarks. Dr. Zawada is Chief Economist of the Asian Development Bank and Director General of its Economic Research and Regional Cooperation Department. He is Chief Spokesperson on economic and development trends and leads the production of ADB's flagship knowledge products and support for regional cooperation fora. Before joining ADB, he was Professor of Economics at the University of Tokyo and led numerous large-scale development policy evaluation projects for various institutions. Mr. Zawada obtained his PhD in economics from Stanford University. Over to you, Yasu.
Thank you. Thank you very much, Peter. Good morning, good afternoon, good evening, everyone. On behalf of ADB, it's my great pleasure to open today's webinar in relation to our report on leveraging technology and innovation for disaster risk management and financing, jointly prepared with OECD. I would first like to express my appreciation for the strong collaboration with the OECD on this report, in line with the priority areas laid out by APEC finance ministers. I would also like to extend my thanks to Working Group on Regional Disaster Risk Financing and Insurance Solutions for APEC economies, and the co-chairs from Japan and the Philippines for the great support. I would moreover like to thank Undersecretary Hoven of the Philippine Department of Finance, International Finance Group, and our distinguished panelists for being with us here today. We hope this report will be a valuable knowledge product for APEC member countries, Asian developing member countries, and beyond, with relevance for future projects on disaster risk management and financing. Disaster risk financing and insurance is a key operation priority areas for ADB, as laid out in the ADB's Strategy 2030. To this end, ADB has targeted 75% of its commitment operations and 80 billion US dollars of its own resources cumulatively from 2019 to 2030 to climate change and mitigation and adaptation efforts. APEC as a region is most vulnerable to disaster and climate risks, and enhancing social, economic, and financial resilience to the elevation of such risks will be an enduring challenge for the APEC region. In the past 2 decades, the region accounted for more than 80% of global economic losses and over 40% of victims from the disaster events. APEC economies face 8 of the 10 costliest earthquakes between 2000 and 2018, and 7 of the 10 costliest floods. The ongoing coronavirus disease, COVID-19 pandemic, has once more underscored the scale of losses that disaster can trigger, and has vividly illustrated the importance of disaster resilience, readiness, and response. The current crisis has once more brought to the fore the importance of the project geared towards the strengthening disaster resilience. Given this context, The report examines how technological advances and innovative approaches can facilitate preemptive action before disaster risks and climate change risks have materialized, effective response in an immediate onset of such risks, and swift recovery in the aftermath of natural disasters. The ongoing advances in digitalization of regional economies offer unprecedented opportunities in enhancing resilience to disaster and climate risks, while enhancing the availability and affordability of financial protection tools such as insurance. It presents considerations for policy markets and stakeholders in Asia and Pacific region to effectively face risks moving forward, striking a balance between fostering innovation while ensuring proper safeguards are in place. Today's presentation of the main result of the report will be followed by a panel discussion with our distinguished guest. I very much look forward to these meaningful discussions, lively discussion, and contribution from today's speakers, panelists, and participants. Thank you. Thank you very much once again. Peter, over to you.
Thank you very much, Yasu, for the warm welcome. Next, I would now like to introduce Mr. Ulrich Westergaard-Knudsen of the OECD to give the welcoming remarks. Mr. Knudsen was appointed as Deputy Secretary General of the OECD in January 2019. His portfolio includes the strategic direction of OECD policy on science, technology and innovation, employment, labor and social affairs, and health, among others. He oversees the Center for Skills and the newly established Wellbeing, Inclusion, Sustainability, and Equal Opportunity Center. Jointly with the Secretary General, Mr. Knudsen transformed the OECD Executive Committee in special session into the Global Strategy Group to have a strategic forum to discuss issues of global relevance, which he chaired from 2013 to 2017. Mr. Knudsen, over to you.
Thank you very much for that introduction, and good morning to everyone, or good afternoon or good evening, wherever you are here from Paris. It's my pleasure to welcome you to the launch of this very important report that we've called Leveraging Technology and Innovation for Disaster Risk Management and Financing. I'd like to thank the Asian Development Bank for the excellent cooperation in developing this report, and of course also the members of the APEC Disaster Risk Financing and Insurance Working Group and the co-chairs from Japan and the Philippines for supporting this work as part of the APEC Finance Ministers' agenda. I'd also like to acknowledge, as this very day, the 11th of March, that it is in fact the 10th anniversary of the Great East Japan earthquake. I think it's important to mark that the disaster brought a lot of suffering and a lot of loss. And it's also a reminder that disasters can have the most unexpected and devastating impact. Enhancing social, economic, and financial resilience in the face of increasing disaster and climate risk will be one of the most important challenges for all economies in the coming years, and among the most impactful in terms of improving the lives and well-being of the people. The destruction and the disruption that usually follows disaster events pose an important challenge to economic development and can perpetuate vulnerability. Despite significant investments in reducing risks, economic losses from disaster events continue to increase at a much faster rate than GDP in many places, implying that the relative economic burden is increasing over time. Efforts to enhance the reach of and also the access to insurance and other financial protection tools have not led to a significant reduction in the share of economic losses borne by households, businesses, and governments that do not always have the capacity to absorb these impacts. A changing climate, as well as continued population growth and asset accumulation in areas exposed to disaster and climate risks, is expected to increase these challenges. The ongoing digital transformation of the economy offers opportunities to improve the management of disaster and climate risks and enhance the availability and affordability of financial protection tools, such as, for example, insurance. Internet access, smartphones, connected devices, cloud computing, artificial intelligence, and other technologies and innovations will transform the way that we measure and monitor disaster risk and impacts, and it will also provide more comprehensive, more accurate, and timely risk analysis. These technologies and innovations are also changing how insurance is being underwritten, distributed, and settled. It offers huge opportunities to broaden access to this financial tool and distribute some of the financial burdens of disaster and climate risk to the insurance and capital markets that they have the capacity to absorb those risks. There is evidence from various economies around the world that these technologies and innovations are contributing to a more comprehensive, a more accurate, and more timely understanding of disaster risk and impacts, more effective spatial planning, risk reduction investment, and emergency preparedness, and also more inclusive risk transfer arrangements. However, leveraging the contribution of these emerging technologies and innovations will require investments by governments in building the necessary communications infrastructure, developing technical skills, and adapting regulatory frameworks. The OECD, let me assure you, stands ready to support both OECD and APEC member governments and key partners in helping create the enabling environment that's necessary to leverage the opportunities provided by emerging technologies and innovation, while at the same time managing the accompanying risks. So thank you very much for inviting the OECD to contribute to this very important area of work.
Many thanks, DSG Knudsen, for the welcoming address. As next, it's my great pleasure to introduce Undersecretary Joven of the Department of Finance, Philippines, co-chair of the Working Group on Regional Disaster Risk Financing Solutions for APEC Economies. Mr. Joven is the Undersecretary for the International Finance Group of the Philippine Department of Finance. He was formerly Assistant Secretary of the Revenue Operations Group. He recently shepherded the implementation of the Tax Reform for Acceleration and Inclusion Law and the Customs Modernization and Tariff Act. He previously chaired the Tax Committee of the Philippine Bar Association and co-chaired its Legal Education Committee. He earned the Master of Law degree from Harvard Law School and bachelor degrees from the University of the Philippines. Over to you, Undersecretary Joven.
Thank you. ADB Chief Economist Zawada, OECD Deputy Secretary General, Ms. Amici Kono, distinguished colleagues from the Asia-Pacific Economic Region, good evening and thank you for joining us. The Asia-Pacific region is highly exposed to disaster and climate risks. The region accounts for more than 80% of global economic losses from disaster events in the last 20 years. These losses pose big challenges, particularly to the public sector, which often takes the heavy task of response, rebuilding, and recovery. While we invest to reduce and manage disaster and climate risks, this may not be sufficient. This effort requires continued enhancement through improving risk and impact assessment. The current digital transformation across economies offer the opportunity for better risk and impact assessment. Through enhanced capability in data collection and analysis, digitalization can allow us to improve the management of disaster and climate risk. It could also expand availability and at the same time increase the affordability of financial protection tools. As co-chair with Japan on the Regional Disaster Risk Financing Solutions for APEC economies, we welcome the study of the ADB and the OECD on leveraging technology and innovation for disaster risk financing and insurance. The study examines three areas. First is the access to data through Earth observation technology, street-level imagery, connected devices, and volunteered geographical information. Second is the capacity to process and analyze data through cloud computing and big data analytical techniques such as artificial intelligence. And third, capacity to transmit risk and risk management information given the proliferation of internet and mobile access and improvement in broadband and data speeds. The study poses strategic approaches to leveraging and integrating these technologies and innovations into effective disaster risk management and financing. More importantly, the study provides recommendations for policymakers to focus on resilient communication infrastructure, technical skills, access to data and analytical technologies, insurance regulations, and user awareness and trust. These recommendations provide guidance in our continued efforts to manage disaster and climate risk and open up further avenues for cooperation across economies. In closing, we'd like to congratulate the ADB and the OECD for coming up with this important study, and we look forward to insightful discussions in this webinar. Thank you and good day.
Thank you so much, Undersecretary Robin. So after these important remarks, let's now move on to the next agenda item, which is the presentation of the main findings of the report. It's my great pleasure to introduce today's presenters, Dr. Mamiko Yoko Arai of the OECD and Dr. Sinyoung Park of ADB. Dr. Yoko Arai is Principal Administrator at the OECD. She is responsible for the coordination and organization of the OECD's Insurance and Private Pensions Committee, and is leading a multi-year project on long-term healthcare insurance. She also works on financial market issues, including the assessment of the financial systems and SME financing. Dr. Yoko Arai previously worked at the Bank of Japan and the Japanese Financial Services Agency. She has a PhD in law from the University of London. She will be joined by Dr. Park, Director of the Regional Cooperation Integration Division in ADB's Economics Research and Regional Cooperation Department. She manages a team of economists examining policy issues in regional cooperation and integration. Her team also produces the Asian Economic Integration Report, which, by the way, has just been published last month, the one for 2021. She's been a main author and contributed to ADB's major publications, including the Asian Development Outlook. And prior to joining ADB, she served as economist at the OECD from 1999 to 2002, where she contributed to the OECD Economic Outlook. Dr. Park received her PhD in economics from Columbia University. Over to you, Mamiko and Sinyoung.
Thank you, Peter. So I will start first. Let me just share my screen. So yes, thank you very much for the introduction, Peter. We have been very honored to be able to cooperate with ADB on this report, and I think the outcome of the report has been very beneficial for our understanding of how innovation technology can really help in mitigating disaster and really managing the risk of it. So I'll start off with the first slide. So I think we've already talked about how much the APEC as a region has been exposed. Chief Economist Zawada in particular has talked about it, and so I won't go over it. But economic losses resulting from the disaster really continue to increase across the APEC economy. And I think the disappointing thing has been progress has been limited in increasing contribution of insurance, particularly in middle-income countries. And in high-income APEC economies, the share of losses covered by insurance between 2016 and 19 was just over 50%, which is from 2010-13 was 40%. So really the insurance sort of contribution has been quite muted relative to the hopes that there has been about insurance. So I just wanted to sort of show you this diagram that we have put together to try to give some understanding about what sort of components of technology and innovation contribute to disaster risk management and financing. So enhancing resilience will require investments to reduce the economic, social, and financial impacts of disaster by improving really risk and impact assessment and leveraging those improvements to invest in risk reduction, preparedness, and response. So this could be through spatial and land use planning, prioritization of risk mitigation investment, and improved preparedness and emergency responses. So this graphic, it provides an illustration of how these emerging technology and innovation can be applied to disaster risk management and financing, and how the emergent analytical techniques can be used to interpret the greater amount of data and to better understand the risk and impact that is present. So the digital transformation of our economies has really brought about an increasing amount of data accessible through the internet, and also the ability to interpret, manipulate, and transform. And so this is our diagram demonstrating this in some illustrations. And then also the outcome of data analytics can create new opportunities to improve the management of the disaster and climate risk, and make insurance and financial protection tools more available and affordable. So I want to give a couple of examples just to highlight some of the findings of our report. So this example is from May 2019 in the city of Ottawa in Canada, and which was affected by high water levels along the two major rivers that meet in the center of the city, as you can see in the map. So improvement in Earth observation technologies through the use of synthetic aperture radar provides the ability to capture data on the land characteristics at all times of the day, and also during all types of weather conditions, including significant cloud over, which is a significant improvement over the imagery that was available in the past. So then this data can then be linked to openly available maps of buildings and infrastructure, such as OpenStreetMap map, which is populated by crowdsourcing geocoded images available on the internet. So the combination of these technologies allowed for the creation of a damage assessment from the flood, which was for an area of under 2,000 square meters in under an hour, which is sort of remarkable if you think about it. So the next slide, I want to sort of just give what that means. So there are a number of factors that impact the level of insurance penetration for disaster perils in a given economy. But ultimately, the bigger the gap between the cost of insurance and the willingness of households to basically pay for the insurance makes it more difficult to achieve a high level of insurance penetration and protection for disasters. So so the report underlines a number of areas in which the cost of insurance could be reduced through technology. So for example, reducing the level of uncertainty about risk, lowering the cost of underwriting through automated underwriting approaches, reducing the distribution costs through online and mobile distribution models, lowering the overall cost of reinsurance by reducing risk uncertainty and also administrative efficiencies such as smart contracts, and also lowering the loss adjustment expenses by increasing automation of claim settlement. So this is just trying to give a illustration of how this might actually work. Okay, so I want to go next to a couple of examples of parametric insurance, which is becoming an increasingly important way in which to bring about coverage. This is relative to what we call indemnity insurance. So this is coverage that is triggered based on the physical parameters of an event rather than the level of loss incurred by the policy, which is indemnity. So the design sort of creates efficiencies by offering one potential approach to expanding the penetration of insurance for disaster risks. So one is in the US state of California, one insurance company is offering a basic parametric insurance product for earthquake that is underwritten based solely on the location of the insured property. So the other, Flood Flash, is in the UK, and businesses can acquire insurance coverage for floods that is linked directly to the water level reached at the insured property. So each policyholder receives a connected sensor and decides on a water level that will trigger the coverage. So these types of innovative products simplify the process of acquiring insurance coverage and assessing the claims, and it should ideally reduce the cost of the insurance. So I'm going to skip the next slide because we are a little bit short of time and go to the regulatory aspects that might be necessary. So a couple of examples for the insurance sectors on the types of regulatory adaptations that could be needed to leverage the technologies and innovations. So obviously, insurance pricing rating oversight. In many economies, insurance supervisors establish a criteria that must be met in assessing the calculating the premium prices. And this approach aims to protect consumers for overpricing, but it could potentially impede the use of emerging technologies for assessing risk as well. The other element is distribution. So this is also a consumer protection measure that is in place, but it could mean that only sales through face-to-face meetings are permitted, and this is obviously a way in which technology could be impeded. Core function requirements, so that means that some insurance supervisors require that relate to an insurance company's control over the execution of core functions such as underwriting or claim settlement, which could potentially be outsourced. So this would obviously mean that they have limited capacity to sort of use technology for outsourcing, for example. Indemnity requirements. So in some economies, insurance can only be provided as a coverage of an actual loss, as opposed to the parametric insurance that was just introduced in the previous slide. Also, there are cross-border restrictions in terms of innovation and insurance is occurring in all corners of the world, and having more global, obviously, operations often have the best access to new approaches and innovations. So restrictions on cross-border risk transfer limits the ability of the domestic insurance company to access the knowledge and innovation available globally, obviously. And also domestic insurance companies may have diversification challenges as well. So here I'm going to hand it over to Signon to continue with this slide.
Thanks, Mamiko. Well, taking this opportunity, let me again thank OECD for really productive and excellent collaboration on this project. Well, ADB has a number of projects to support its developing member countries in building resilience to disaster risks. And I'm very pleased to share with you some examples that are incorporating innovative approaches to disaster risk finance and insurance, as the report findings suggested to be very useful. The first is to establish disaster risk financing schemes, especially in the Philippines. We have the program called Disaster Resilience Improvement Program. And this provides contingent financing for disaster arising from natural hazards or public health emergencies like coronavirus. And this supports a pilot city government parametric disaster insurance scheme offered through a risk pooling arrangement. We also have a few pilot studies and cases on disaster insurance. For example, in Bangladesh, we support a crop insurance scheme for small farmers that develops the parametric indices for insurance of crops and use mobile money to collect premium and pay claims. This also helps increase insurance literacy among smallholder farmers. In Vietnam, we have a municipal and rural infrastructure insurance. This helped develop cost-effective and sustainable disaster insurance for public assets and enhance the enabling environment to respond to extreme weather events. In Central Asia, we have a regional project that helps the sovereign risk transfer. This is through development of comprehensive regional disaster risk financing solutions to assist the Central Asia region in reducing their physical and financial vulnerability to natural hazards, as well as to infectious disease outbreaks, just like COVID again. And in the Philippines, another proposed program is trying to help with the automated credit and insurance services for farmers and agro businesses. This provides knowledge product on integrated value chain financing and risk management. It also helps develop insurance products or guaranteed access to funds up to agreed limits. This help ensure providing some stable income, but no payback obligations as opposed to lending-based solutions post-disaster. We also explore ways of finding suitable fintech business applications for customer profiling and credit scoring of farmers, and help map risks for insurance underwriting and claims administration using big data. So these are some of the examples, but I do believe that there are really a large set of innovative approaches that we can explore and helping ensure these vulnerable groups and also help reduce the exposure to disaster risks for developing Asian economies. So I believe that this wraps up our presentation. We'll be very happy to answer any questions. This is the report. This is already online, and the QR code can be used to access to the report and download it from online. Thank you.
Thank you very much, Mamiko and Sin-Yang, for that very comprehensive presentation. It's now time to move to the panel, and it's my pleasure to introduce today's moderator of today's panel discussion, Yoshihiro Kawai of the OECD and of the Financial Services Agency of Japan. Professor Kawai is chairman of OECD Insurance and Private Pension Committee, advisor to Commissioner, Financial Services Agency, Government of Japan, and member of International Advisory Council, China Banking and Insurance Regulatory Commission. He's also professor of Kyoto University and Tokyo University. He held the position of Secretary General of the International Association of Insurance Supervisors from June 2003 until November 2017. Professor Kawai was also a member of the Financial Stability Board from 1999 to 2017. Professor Kawai earned his PhD from City University, London. Over to you, Professor Kawai.
Thank you very much, Peter. A very warm welcome to the panel discussion. So we will now go a little deeper into some of the issues raised in the OECD ADB report with the help of distinguished panelists. As we have heard, the management of disaster risk is a key policy issue for governments, particularly across the APEC region, which is the most impacted region by natural disasters. It's also an issue that has been extremely difficult to manage, as we have discussed, as losses continue to increase at a faster rate than GDP, and as the level of financial protection provided by insurance is stagnant in many economies. Technology and innovation could make an enormous contribution to reducing risk and enhancing financial preparedness. Emerging technologies and innovation such as connected devices, crowdsourcing, cloud computing, and AI have important policy implications for all sectors of the economy. In our sector, insurance, these technologies are being deployed to improve the assessment of risks that are being underwritten and make distribution of coverage and the settlement of claims more efficient. These changes can benefit policyholders by making insurance coverage more available and more affordable. They can also entail risks if the technologies being used are not well understood or result in adverse outcomes in underwriting and claims decisions, which has been the key area of concern of insurance regulators and supervisors. We have today world-leading panelists with us to share their experience and knowledge on these issues. So I would like to introduce Svenja Sominski. She's head of adaptation research at the Grantham Research Institute on Climate Change and the Environment, part of the LSE, London School of Economics and Political Science. She is overseeing research project investigating climate risk management and resilience strategies, focusing on public policies, financial instruments, and corporate governance. Oliver Walker, he heads Vivid's Natural Resources Practice Group and leads Vivid's work on resilience and disaster risk management. He has over 13 years experience in developing and communicating strategies that promote economic and social resilience in private markets and for the public clients. Svenja and Oliver and their teams were instrumental in the development of the report of ADB and OECD. Bill Macro, my close friend for a long period of time, chairs the IDF Insurance Development Forum's working group on law, regulation, and resilience policies, and a main author of an IDF paper on how technology can help bridge the protection gap. He has 40 years of experience working in the insurance sector, most recently as the global head of the DLA People's Corporate Insurance Practice, and previously as co-head of the insurance sector practice at Dayway and Levon. We are also fortunate to have two distinguished panelists who are involved in the implementation of disaster risk management and the financial strategies and the integration of new technologies for financial protection against disaster risks. Paula Sherina Alvarez is currently the Assistant Secretary for International Finance and Special Project and the spokesperson and head of communications at the Philippines Department of Finance. As an assistant secretary, she handles suitable and climate finance and disaster risk finance. She sits as the finance secretary's alternate in different international platforms, such as ASEAN, DRFI, DWG, APEC, and the Coalition of Finance Ministers for Climate Action. Alex Chen, another my friend, is head of broker segment at Pelago Analytics, a risk data platform company headquartered in San Francisco. He joined now at 2 a.m. from San Francisco today. His company helps property owners, brokers, and insurers digitalize risk, connect exposures, improve insurance outcomes, and lower the overall cost of risk. He's also founder and chairman of Asia Risk Transfer Solutions, a Singapore-based institution firms that develops natural catastrophe and agriculture underwriting models for Asia, and a member of CCI Financial Subcommittee Advisory Group at MAS, Monetary Authority of Singapore. So we have overall format of today's discussion is first 40 minutes or so, we have a moderated discussion, and then we have around 15 minutes, 10-15 minutes Q&A. So we invite questions from the audience. If you have any questions, please put on Q&A part of the Zoom so that I can pick them up during the Q&A session. Okay, so let's kick off. So I'd like to ask Oliver, you and your colleagues at Vivid Economics contributed much of the research behind the development of OECD ADB report. So my question is, what emerging technologies and innovations did you identify as the most relevant for disaster risk management and the insurance of CAT risks?
Thank you very much. Am I audible and visible?
Yes,
Yes,
we can see it and we can hear it well.
Okay, thank you. Well, thank you first very much for having me on this panel. It's an honor to be here, and it's excellent to see this work be published and publicized. So we pay a great deal of tribute to the colleagues at ADB and OECD for taking our research work on and putting it into this fully fledged form. So in the initial research that we undertook alongside Svenja and also some colleagues from IASA, we looked at technologies across 4 groupings. There was data collection, which included advances in technologies such as Earth observation and the Internet of Things. These technologies allowed us to understand exposure and vulnerability in much greater granularity than before in advance of a disaster, and also to understand how disasters unfold in much greater temporal granularity in real time in some cases. Then there's data processing. Those are the technologies such as AI techniques and low-cost cloud computing, and these allowed us to consolidate rich and varied sources of information and draw out information on risks both before and in the aftermath of an event. Then there's the data transmission and technologies, things like mobile apps and social media platforms. That these allow us to disseminate the information on disaster risk, both before the event and in its onset, in an accessible and intuitive form that allows decisions to be taken. Also allows, important for DRF, where these kinds of platforms can allow insurers to reach vulnerable, often unbanked populations in remote parts of the world at low costs. And then the final group we looked at was around physical inputs, technologies such as drones, rescue robots, and 3D printing, which can expedite relief and recovery efforts by providing necessary equipment or supplies. And we've seen these applied in instances such as after hurricanes to restore communications equipment, which can itself expedite much more effective efforts in relief and recovery. And so in terms of which of these was the most impactful, I think the key thing to note is that the technologies don't work in isolation, but rather exist in the value chain, particularly a data value chain. And this means that innovation in one area can augment the usefulness or facilitate the usefulness of innovations in adjacent areas. So we saw a number of critical technologies within this data value chain that actually build upon each other, and that's how they have the impact in disaster risk management and disaster risk finance. So the key ones we identified were Earth observation, where we have improvements in LiDAR and SAR sensors that allow us to better understand features of the built environment, and circumvent issues such as cloud cover, which can be a particular issue in tropical regions, and where increased revisit satellites give much better spatial resolution. So we have much finer spatial and temporal resolution data. Then we have another data collection technology around the Internet of Things, where we have great improvements in the accuracy and interconnectedness of devices, and these can improve the early detection of disasters and allow coordinated responses. Then at the next section of the value chain, we have artificial intelligence, which are techniques that allow, such as image processing, data mining, that can leverage all this rich and very diverse information and interpret it much more rapidly. This is in comparison to previous standard techniques, which would require very labor-intensive pre-processing and interpretation that kind of would negate the benefit of real-time information. And then finally, we have the transmission technologies, particularly social media, where platforms such as GitHub greatly expand the accessibility of these techniques, and the platforms on people's phones or in decision support platforms allow the findings to be actionable. So I think all of those technologies in combination are really what's critical. And to round off, I think we've got a good self-referential application of all of these in the realm of disaster risk finance, where we're working with Svenja now on an insurance platform in Bangladesh that makes use of machine learning techniques to understand the relationship between flood events and specifically relief costs. That in turn can underpin both a parametric product that targets relief costs as opposed to being proxied by building damages, like many other products, and also can feed into a real-time decision support platform. So the impact is not only do we have more payouts better aligned to losses, but we also have real-time information in over what to do with those payouts. So that's something we're doing at the moment.
Thank you, Oliver. Very, very informative. So what you have said, the data value chain, so it's not only data, but data processing and all those related issues create the platform for this innovation. Thank you so much. So just based on what Oliver said, we just built on discussion. So Bill, I hope you can join now. So just IDF, your organization Insurance Development Forum, very important forums, legislation, regulation, and the resilience policies working group has also examined this issue. So would you add anything to the findings of OECD ADB report, particularly what Oliver stressed?
Yes, Yoshi, great to see you. Thanks very much.
Great to see you. Thank you, Bill, for joining.
Yeah, and listen, I'm going to echo Oliver's comments. One, for being grateful to being asked to join, and two, to say congratulations to the OECD and ADB on this report.
Thank you.
Listen, there is a lot going on in this area of the use of technology, and there's just no doubt that this report really adds to the thinking. And I think one of its greatest aspects is the ability to distill a lot of this to, I think very concise, informative statements for all sorts of stakeholders in this area. As an example, I think in Mamika's opening statements, the chart, the diagram that she showed, the types of technology and then how it plays into the whole narrative and story of what the insurance industry can do in this area. It's, the saying, a picture's worth 1,000 words, but I think these diagrams and charts that are in the report really do tell the story. And as Oliver just reviewed, in terms of the types of technology, he's done it well in terms of the various spheres and types of technology that have emerged. And I think you can distill that down to the essence of technology has transformed what we know, when we know it, what we can do with that knowledge in terms of analyzing it and operationalizing it, and who we can communicate that knowledge to. And it's all of these areas of Earth observations, but it's just all of the data sources, and they are extraordinary. And they come from all sorts of other evolutions and economies and societies and social interactions. And yet this can be now harnessed, for the better and to allow the insurance sector to do things better, faster. I do think it's important to note that these technological developments, they're not a silver bullet. They're not going to magically address this huge issue of the protection gap, which is what we are talking about. It doesn't transform an uninsurable risk or a risk that is just unaffordable to insure. It doesn't magically transform it into something that is insurable or the insurance premiums are affordable. But it's a game changer in terms of what can be done, the ability to reach people who otherwise were not reached, the ability to create products that are more relevant. And again, I think Mamiko talked a bit about this, but it's obviously in areas of efficiency, it cuts out friction costs, and that makes insurance more affordable. So it's hugely important, but I think we need to to remember that there's a lot of other things that have to happen in order to close the protection gap. And then finally, let me just emphasize, and I think it'll come out in our discussion here, when we talk about insurance, so often we talk about the risk financing, what we typically think of: I buy an insurance policy because if something bad happens, I'm going to get money. And that is really important. But the insurance sector brings a lot more to the table, and technology enhances the insurance sector's ability to bring these skills to the table. And those include risk mitigation, loss avoidance. So it's not just responding and picking up the pieces when the wind blows or the waters flow or the earth shakes, but it's also helping governments, but helping individuals, helping companies understand their risk. It is the risk awareness, but then also giving the tools for what we might do to prevent the flood from damaging our home or our business or our schools or whatever it might be. So I'll stop there. I think a lot of the details of technology are going to come out in the discussion here, but hopefully that adds a little more in setting the scene for the rest of the discussion. Thank you.
Thank you, Dale. Thank you very much. You mentioned, not only risk financing, but our expertise, insurance industry's expertise is extremely valuable. And of course, a protection gap to address by technology is a very important issue that we hope to discuss further. So now I'd like to ask Paula Alvarez, Philippines Department of Finance is an exemplary authority, right? Which has been at the forefront globally in terms of identifying and managing the risks that disaster pose to public finances. So how has the Philippines made use of emerging technologies to improve risk assessment and risk management capacities? Have some good practice emerged in terms of the types of institutional management that support the integration of emerging technology? Paula, I very much appreciate your thought on these points.
Thank you, Yoshi. And just to add to what the OECD ADB report has already highlighted, and based on the two earlier panelists, the Philippines, being a highly vulnerable country to natural disasters, is actually accelerating its efforts to put in place programs and policies to not only manage the effects of disasters, but to also mitigate the impacts of disasters. So technological innovation has been bringing digital solutions to different sectors of our society. So it is a very welcome development that opportunities presented by increasing technological innovation is being harnessed to better the lives of the people. So on disaster risk management, we actually have a few examples. So the first is GeoRisk Philippines, or the Geospatial Information Management and Analysis Projects for Hazards and Risk Assessment in the Philippines. So this is a multi-agency initiative led by the Philippine Institute of Volcanology and Seismology, which is funded by the Department of Science and Technology and monitored by the Philippine Council for Industry, Energy, and Emerging Technological Research and Development. So it is envisioned to be the Philippines' central source of information for accurate and efficient hazards and risk assessment to help the government increase the nation's resilience to natural hazards. So this allows the decision makers to better manage disaster risks through the use of geospatial tools to inform development planning and programming. So it provides the protocols and platforms to share hazards, exposure, and risk information to help people, communities, local governments, national agencies, and actually also insurance providers to reduce the risks of natural hazards. So the GeoRisk Philippines currently has 3 platforms. So first is the Hazard Hunter PH. So this is a software application that can be used by different people to generate initial hazard assessments in a selected location for seismic, volcanic, and hydrometeorological hazards. So it allows a visual search of a specific location on a map, and the app will display the hazards present and generate in the initial assessment report. So the launch of this app actually was to help people to generate data from the crowd, like they usually type in their address and see how much hazard they're exposed to. And it has actually helped people better prepare and to help them better decide what types of insurance products they actually need. So another one is the Geoanalytics Ph. So this is released for local governments and decision makers. So this is also a web app that can provide summary reports on population, schools, and health facilities exposed to tsunami hazards nationwide. So it can also calculate the total data or total area exposed to tsunamis. So this government initiatives can also serve as a platform for non-life insurance industry in assessing risks for earthquakes, floods, and natural calamities and related insurance products. So the other one is the geomapper.ph. So this is also an application developed by the GeoRisk Philippines, which serves as a platform for national government agencies and local government units and non-government organizations to access, utilize, and contribute data to the GeoRisk Philippines integrated database. So another project is the National Copernicus Capacity Support Action Program for the Philippines. So this is a satellite geohazard mapping project proposal and is financed under the Development Cooperation Instrument of the European Union. So the Copernicus program services are based on information from a dedicated constellation of satellites known as Sentinels. So as well as tens of third-party satellites known as contributing space missions, complemented by local or on-site measurement data. So the program seeks to address key objectives of the Philippine government to develop and utilize space and science and technology applications to enhance its hazard management and disaster mitigation strategy. So this is led by the Department of Science and Technology and the Department of Environment and Natural Resources. So the areas of support include awareness, data infrastructure, uptake on data information, and skills development. And lastly is the National Identification System. So during the pandemic, the government found it very important to have an integrated national identification system for us to better monitor and deliver services and other support, especially during calamities. Like we need to pinpoint how many people are located in a specific area, and for us to verify the information and the identification of who receives the amelioration packages, for example, for the COVID pandemic. So there are a lot of things that we could still explore in terms of technology and how to harness it to better help governments prepare or mitigate disaster risks. And I think this is just the beginning of what else we can do. So thank you.
Thank you, Paula. Fantastic. So you said just the beginning, but you have done quite a lot already. And this is definitely, as Oliver kicked off, data value chain. So you just implement the exemplary, this data value chain led by your government. Thank you so much. We have learned a lot. So just I'd like to ask Swania, particularly the institutional arrangement that are necessary to support the integration of new technologies was one of the areas of focus for your research. And is there anything that you would add to the list of good practices that Paula has identified in the Philippines? Are there any good practices in terms of institutional arrangements that were identified in your research? Swania, please.
Yeah, well, thank you very much and welcome to everybody. It's really nice to see so many familiar faces, and I'm very excited after the really good collaboration that we had with colleagues at Vivid, at IASA and ADB and OECD to now finally see the results. So yeah, well done, and I hope that this report will not sit on the shelf but be used. And I guess that's kind of my starting point. I mean, listening to Paola, there's a reason why we sometimes describe the Philippines as the poster example for integrated DRM and institutional arrangements. And, I think I really like the way that, the more holistic approach there, because I know when we talk about DRM, disaster risk management, we always think usually in our little silos. So it depends. If you talk to insurers, it's obviously all about risk transfer. If you talk to land use and city planners, it's all about what they do. If you talk to emergency and early warning experts, it's all about what they do. But then to realize, and this is where technology comes in, that often, the data that underpins all this, could easily be applied across these different applications. And I like that when Paola was describing that, to setting up the institutional arrangements for that and encouraging that. So I would just like to highlight, the focus of the report is on technological innovation and how that can then be, be adopted. And I think usually technological innovation is successful when there is trust and transparency, when there is a clear usability and clear access to the technology, and when there are incentives to actually use and apply it. And that could be a strong business case or public incentives or regulatory push. And I think from our work, what we've seen is often there are many good practices in this space where you see these different aspects coming together. But unfortunately, there are also many examples where, because of lack of one of those, really good pilot projects never really made their way further. And despite our good intentions, the investment, the technology was never really applied. And I think, yes, you asked me about good practices, but I think this is an important lesson to be learned, because I think, we have made huge advantages in our technological capacity around disaster risk management. But where we haven't made huge advances is in applying that to different types of decisions. And it won't come as a surprise to those who know me quite well. I always kind of argue for really holistic perspective. If you have data, and a lot of the technology examples that Ollie mentioned, they are underpinned by data, and the innovation is the use of data, the access to data there. But that can be as good as it is if you don't have the underpinning capacity building for those who are supposed to use it, for those who are supposed to include that in their decision making. Then you're bound to face challenges, and it can also go wrong. I mean, we sometimes see this with parametric insurance, where there are often misunderstandings, and then there's frustration. And I think this sort of transparency and capacity building is really essential here. And yeah, I just want to highlight that, because in a way, I'm very excited about the technological opportunities here, but I think, that excitement, I hope it won't be damped by, seeing some of these fail because, they can't really be translated into usable technologies. And I think governments, through regulation, through incentives, also through capacity building, can play a big role there. But then it's also the technology providers and the innovators need to understand what are actually the broader sets of disaster risk management challenges that need to be addressed. And if you design a parametric insurance index, that's one thing. But to also think through how can that data be also help to inform, help to change behavior. And yeah, I think, there are exciting good practices, but there are also quite a few warning signs that we should, take into account when moving to the next level. So hopefully not too skeptic, because I am really enthusiastic, but I think a bit of a reality check, and yeah, sort of learning lessons also from experiences in the climate services field, where, really good structures, good networks, good platforms exist. And then often you ask people, okay, has this really been translated? Do regulators understand it? Do policymakers understand it? And sometimes, there are big gaps and big silence. And I think this project, hopefully with ADB and OECD, the evidence that's provided here has a real potential to change that. So yeah, hopefully we can discuss this a little bit further. Thanks.
Thank you, Svenja. Excellent. So you hit the very important point. So of course, technology innovation is extremely relevant, but without implementation, without technical experts who implement that technology, it does not make any impact. It's not only a government issue, but also private sector or market practitioners and so on. So that now let's move to the ideal person to talk about this issue, Alex. Alex, I still remember I visited your office and you explained very clearly your sort of risk model and how implement in Asia. So you work with insurance technology companies in US and Singapore that aim to bring the benefit of new data and analytical technologies to the insurance sector. So can you provide us or enlighten us, with an illustration of how these technologies are being or can be used to improve the accuracy or efficiency of underwriting and exposure management? And what do you see as the main benefit for policyholders from the application of emerging technologies to insurance business functions such as underwriting or claim management. And we expect that the usage or use of emerging technologies could lead to reduced cost for insurance coverage. And in addition, I hope that you add the point that Svenja emphasized, is it implementable? Is it enough expertise or experts in the market? If not, how do you address this issue? So Alex, please enlighten us.
Okay, thanks, Yoshi. It seems like yesterday that we were getting together for coffee at my office, and
yes,
really,
now.
yeah, really looking forward to getting together once COVID is over, hopefully soon.
Yeah, definitely.
Yeah, of course. I mean, happy to chime in on some of my experiences working in this sector. As Svenja alluded to earlier, I think I completely agree that data is the fundamental building block for insurance, right? And it's just fascinating to see how the same piece of information is being consumed and passed on from the point of origination, the policyholder, through brokers, insurers, reinsurers, and sometimes to the capital markets. And if you talk to each one of them, they will tell you a different view of how they see data, right? So that's all good, but what do we do, if the original piece of information is lacking or of poor quality in the first place, right? Which happens a lot of time. So from my experience at Asia Risk Transfer Solutions, we were working closely with insurers like Allianz, Tokyo Marine. We developed kind of analytics for natural disaster parametric insurance products, okay? So what we actually focus on are like earthquakes and other climatic events for agriculture, for example. So it became quite evident to us that the limited availability of quality data limited what kind of things we could actually deploy in reality. So in theory, we have all these ideas about analytics being being able to create such products in a way that we think it's going to be highly relevant, reduce the basis risk to a minimum. But in practice, that's not the case because we actually lack the data to do it. So we actually had to find a lot of ways to kind of fill in the data gaps. And probably some of you who have discussed this with insurance companies, when they do not have data, what do? They either, there are two ways. One, they either apply the average value for the risk for properties of similar attributes, or the other way, they actually assume the worst possible value, right, for a particular asset. So when we think about technology and insurance, I think that data challenge is still and is going to always be one of the biggest challenges that we're going to face, right? It's just a constant effort to get better. So I think the other example that I would draw on would be actually focus on this aspect. So my team at Archipelago is hoping to solve part of the data problem by improving the quantity and quality of exposure data for insurance and underwriting. So at the core of Archipelago is actually an AI platform, right? Artificial intelligence driven to help property owners, asset owners easily digitize the risk and link all the data that they have about their assets, for properties. They are lying around in, spreadsheets or PDFs into a single standardized platform. And once the property data is on a cloud-based platform, like Mamiko has shared earlier on, how we can use this, what they can do is they can better understand the risk of their assets, and they can share these data sets with their insurance partners, just by sharing a link. So the insurance companies see the same data, there's no, loss in transmission, transmission loss, in just like, how we actually think about often when we send emails, people do not, receive the mail, and this is very common stuff. So I think technology has a way of really reducing the risk of, people not being able to see the same level of data that we do. And the overall goal is we believe that insurers can provide better coverage and more appropriate terms that reflect the true nature of the risk of the policyholder with better data. So I think in a nutshell, I'm not going to go on too much, but I think what we are trying to do is to address the data challenge at its source. We are helping the data owners, the property owners, to build rich, ready-to-use insurance data very easily using machine learning techniques, and allowing this high-quality data to flow downstream into various insurance use cases. And I would just like to echo what Bill has mentioned. Technology is not a silver bullet, and I think there's a lot of work that we different parties have to work together to kind of solve the same issue when the tire actually hits the road, right? So, yeah.
Thank you, Alex. So you emphasize very much this, all the technology does not work without good data, and that's a basic foundation, right? So thank you very much for this important point. So let's move on. So Bill, now the need to adapt to regulatory framework to permit or recognize the use of new technologies, insurance distribution, and product development was a key focus for your work, IDF's work. So what are the main areas where you identified a need for regulatory adjustment, and are there any significant risks to policyholders in insurance use of these technologies? For example, consumers protection perspective. Could you make a comment on those points, please?
Yes, thanks, Yoshi. And of course, this is an area which you could speak even more knowingly than I. So I speak under your control on this issue. And I think it's important to note that the IAS, the International Association of Insurance Supervisors, which you led for many, many years, has been actively involved in this area. And it's because of this simple fact that the things we can do with technology, the types of products, how the insurer interacts with the customer, has changed things so profoundly as we've talked, but it operates within a heavily regulated environment, which is a good thing. I mean, this is the insurance industry, from solvency regulation to market conduct related issues. I honestly, Yoshi, you know this, I believe it thrives when there is good regulation, when there are the right controls. But the issue is that technology has changed in many ways. Some of the following fundamental points. What is an insurer? When is someone acting as an insurer and hence needs to be licensed as an insurer? When is someone acting as an insurance intermediary and hence should have the requisite controls and supervision over intermediaries? What actually is an insurance product? How do you differentiate that from a derivative or some other security? What if it's debt relief in the event of a catastrophe and that provision is in a bond, essentially providing a very significant financial benefit to the borrower in the event of a catastrophe for a fortuitous event like an earthquake that knocks your building down. But that's not treated as insurance. I think it could not. But anyway, so these are the types that really goes to the heart of insurance regulation, which as I say again, is regulating insurers, what they can do. So you got to define that, regulating intermediaries, regulating insurance products. But those definitions are getting scrambled, they're getting changed. And of course, it's true that the insurance codes of various countries don't evolve overnight. And in many instances, we literally have laws and regulations that were drafted in the 19th century, or at least in the 20th century, being applied to an industry that is now working in the 21st century with just tremendous, changes and the like. And so this is a very, very important area because, as I said in the opening comments, the insurance industry thrives when there is a good legal regulatory environment that allows it to do, what it can do with the right level of supervision, not excess, constraints. And some of the, and so this is the discussion that's taking place. And I applaud the regulators in many, many jurisdictions, both in Asia and Europe and in the United States, and elsewhere, where regulators understand the importance of this and they're engaging with the industry. I think it is imperative and it's incumbent upon the industry to really take the time to talk to regulators, to help educate them about what technologies are being used and what the right level of regulation should be, because getting this right is going to be one of the drivers of success, or maybe not failure, but just limited success, sort of why things don't get executed, or don't advance. But at the base of this, Yoshi, you noted it. It's the risk to policyholders. And let me just say just a couple of quick words on that, because that's clearly the concern of the insurance supervisors. It ought to be the concern, and I think it is, of the insurance industry as well. And the risks are really this. It's asymmetrical knowledge. Insureds today don't really understand the insurance industry, how it works, how it's priced. And we all see disappointments, with insurance products because they're not fit for purpose, or they don't meet expectations, et cetera. And so it's not the most, it's not an industry that's understood by a lot of its customers. And that is a huge issue for the industry. Let me just note that they need to address that. But here it can become even more acute, where technologies are being used, where again, the customer, even a relatively sophisticated customer, won't really understand what's driving the pricing or what triggers the payment, and that's a big that's a big issue. There's what I call the black box syndrome. It's models that the insurers have that, indeed, you put the data in, out pops the product, the pricing, etc. And again, the end user, and maybe even not the supervisor, really understands what's in that black box, how it works. Is there bias, implicit bias in that box, and the like? And of course, there's cybersecurity, there's data privacy related issues. So they're pretty significant issues that need to take place. And I think Swenja mentioned it in her comments, but it's always been front and center in my mind. This comes down to the T word. It comes down to trust, and the industry needs to address that. And within the technology space, as I said, there's some there are some very important additional parameters or aspects to what is the industry doing, and do the supervisors understand it, and do the customers understand it, and is it going to lead to satisfaction? And that needs to take place. So listen, those are some of the issues. Our paper did address that. The OECD ADB paper does as well, very well. The last thing I'll say is there's obviously this issue of cross-border risk transfer, and that is a big issue. And we'll talk about it later or further. I won't push on that right now, but indeed, simply allowing the global insurance industry into countries to do what it can do, or to try to do what it can do, is an important issue to address. So those are a few comments. Thank you.
Yeah, thank you. Thank you very much, Bill, that you pointed out extremely important point. And what is insurance? What is insurance product? What is insurance companies? Those definitions have to be reviewed carefully. And of course, policyholder protection is a key mandate for insurance supervisors, but also best benefit for the policyholders. Regulators should understand very well the recent developments. So we are a little bit running out of time. So let's move on a little bit quickly. Just to Alex, just to come back to you again, from the technological solution providers you are, what have been the most significant impediments to take up the solution that you offer? As Bill pointed out, regulatory issues or anything else. So could you briefly comment on this point?
I think that, if we want to list out the issues, I think there are quite a few categories of them. But I think for me personally, I think just like any, typical business relationship or corporate relationship, it is the willingness and the trust for both parties to, embrace change, and to explore a different way to work together. Because, every insurer, every, government is different. The challenges they face are different. And we probably have to just adapt to them just as they are adapting to us, right? I've been quite fortunate to work with some companies that are, very forthcoming in sharing their challenges, listening to each other and having dialogues. And I think we will need a lot more of those, to have, to create real change and traction in this area.
Yeah, thank you. It's a fundamentally important cross communication, closer communication. Thank you. Just I know that Oliver has to leave relatively soon. Just Oliver, just before you're leaving, could you make your final comments on our discussion? Report to make some recommendation. Do you have any? How do you say urgent, most relevant? Well, every recommendation is relevant, but the most relevant. But could you say something before you're leaving, please?
Thank you, and apologies everyone for having to leave at hard stop. I'd definitely much prefer to be in this meeting than the one I've got to go to. But I think, well, both Svenja and Bill have flagged some really key issues around regulation and coordination. I suppose maybe to expand a little bit on the coordination point, I think coming back to the issue that this is a value chain. So for governments and thinking about public sector nurturing of technologies and adoption of them, thinking strategically about how those technologies interact is super important. I think we mentioned the position of potentially a chief technology officer having oversight of that. I think from a kind of legal perspective, there's also finding the right balance between promoting access to public goods around information and technology and lessons from what works, but also providing incentives for innovators in this technology in this space to make returns. And then I think on the international coordination side of things, there's also that the fact that these technologies are so scalable, it can be much more cost effective to join forces across borders and allow these technologies to scale and receive the benefits at barely, often but close to zero marginal cost.
International cooperation, yes, value chain issue. Thank you very much. Svenja, could you add something or more on the report, or some sort of very, how do you say, the key recommendation that you emphasize?
Yeah, thank you. I mean, Oliver summarized this quite well in terms of, creating ownership, because I think this is an important point. I mean, the technology is there, the technology is being developed. We know that there are certain applications, but what is then the ownership? Like, who within a government department, or who within a company, or who within a community is then the one in charge of understanding the technology, understanding its limitations, and at the same time also having an incentive to actually using it. And there are lots of examples where that works. And we see that in the Philippines, also creating the right incentives for people to actually engage with technology. But these things can easily come to a halt if that one person that's been trained moves on. And I can give you a long list of examples where a lot of capacity building was invested in, and then the person moved to another department, or the person had another role, and it was a question of then sort of institutionalizing that capacity, the skills, because a lot of these technologies require someone to actually spend some time with it and also understand not just the advantages, but also the limitations. So I think that's, it could be through chief technology officer role, but, I just want to underpin the capacity building. And just a very last comment. I know we've talked a lot about insurance. I think, the perspective on insurance, just to flag that I think the insurance industry is sort of underselling its capacity in using that knowledge, that advice, the skills. And there's this focus on transfer solutions, yes, but also the advisory role and that knowledge and so on. And I used to work as a broker, so I know how hard that is, but I think there are lots of opportunities there.
Thank you, Paul. Thank you, Svenja. Just before opening to the floor, Paula, just to come back to you. You lead your governments, as international organizations discussion. So could you just provide us with your view on international cooperation, and also the one that Svenja mentioned, capacity building as an exemplary government who take care of this, technological development for disaster risk prevention or preventive issues. How do you do this this capacity building of your government issue. Could you just point out briefly those 2 points, cooperation and capacity building?
Yes, thank you. In terms of international cooperation, it's very important to have platforms, for example, such as the APEC and the ASEAN DRFI technical working groups, as well as, for example, the Coalition of Finance Ministers for Climate Action. These sorts of platforms give us opportunities to share and learn from each other. Like, for example, in the APEC and ASEAN DRFI, where we work with Japan, we really learned a lot in terms of tsunamis, in terms of hazards related to earthquakes. So our interagency cooperation as well also contributes a lot in terms of capacity building. What we have learned is that when you try to address climate change and disasters, it really has to be a whole of government approach. Like, for example, in our case, it's not just the Department of Science and Technology that has to move forward for innovations and other types of technology, but you also need agencies such as the finance, the planning department, the environment and natural resources department to actually work together. So for example, we give them, or we help them look for financing in order to support the developments that they need. And we try to coordinate them together with the insurance organizations. Like, we provide a platform for them to exchange ideas, to talk to each other, for the regulators, as well as the product developers, as well as the people who actually generate the data. They need to come together and talk about it in order for us to come up with better technologies and better solutions. So these, I think, are the cornerstones for your capacity building, is to help them better understand what they're looking into. And for international cooperation, it's a platform of sharing and learning from each other. So those.
Yeah. Thank you, Paula. Thank you very much. So we have a few, we have a little bit, hopefully, time to have a Q&A session to discuss with our audience. And I have seen a few questions. Maybe at least the first 2 or 3, I tried to address it, and we hope that the panelists will discuss this issue. So first question on the top of the list, I read Ricardo's question. How do you address the risks of insurance exclusion linked to the usage of technology? That's we often discuss this, technology-related insurance exclusion risk. Do you have panelists? Do you have any view on the risk exclusion? Or
Yoshi, if you want, I'll make
Bill, please.
A quick comment. I mean, it goes to kind of structuring products that meet the customer's needs. And we know this is a fundamental issue there, particularly with areas like parametric coverage. We haven't talked about it, or we've talked around it. There's an issue of basis risk, which is essentially the metrics that trigger the product or the coverage or not may not align perfectly with whether the insured actually had damage. That is, the wind speed doesn't quite hit the number for triggering the coverage, but guess what? The home roof blew off, notwithstanding the metrics. And so there's no coverage, but there's damage. And the reverse can be true. The metrics trigger coverage, but indeed there was no damage. This is where technology, and I think Alex talked a little bit about it, it's where better and better data can help eliminate basis risk. Maybe not eliminate it completely, but help eliminate it. And so this goes to, quote, the exclusions, what's covered or not. I do think the other big issue is the data that people have, that insurers have regarding a business or regarding a person is now so sophisticated, as we've talked, but it can allow almost perfect pricing or something approaching perfect pricing. Well, the problem with that is it means people who in fact are a higher risk can't afford their insurance, and people with a lower risk, get a lower price, which is great for the person who gets a lower price and not so great for the person who gets a higher price. And so I think it's a cousin to the exclusion issue, which is it's the pricing and whether that undermines the pooling of risk that's always been there, where the many pay the losses of the few, and that makes it affordable across the across the market. So this impact of technology and what it does for what's covered and what's not covered is a really important issue. And again, it goes to a regulatory concern, but it goes to a fundamental value proposition of the insurance product. Thanks.
Thank you, Bill. Yeah, thank you. Let's take another question, which is related to, again, the data. Marquez's Reyes question. There are data privacy laws now. Are insurance firms allowed to share their policyholders' data with other entities without their permission? It's a question. And also, insurance industry demands and consume data, but they themselves don't want to share information, such as the risk models. There is no transparency most of the time. Any comments on this data privacy issue and sharing the models and so on? Very much relate to what Bill mentioned. Any comments on this data issue? Please, anybody? Svenja, yes, you are intending to say something.
I mean, I used to work as an insurance lobbyist a long time ago.
Yeah, okay, so it's a good position to comment on.
I can give you that side, or I can give you now my
whatever
side.
You think you are right. Okay, please.
I mean, obviously, data privacy is significant and it is important, and it's heavily guarded. I mean, I'm from Germany, and I can tell you in Germany, there's a very different setup to the UK, for example, and insurers there, use data differently than they do here. So just to give you an example, I guess where I've seen examples where actually insurers then also use data or share data quite well is where this comes in the context of applications beyond risk transfer. And that's the interesting thing. So you have data around flood risk, and you might use that to inform your policies, but at the same time that data is shared, and it can then be used by planners, by governments, by land use experts to sort of assess whether their own policies are in line with what insurers think. I think on that front it works, and that it can be pushed a bit further, but I think there it actually works. Or there are at least examples where it can work.
Hey, Yoshi, just to give a concrete example, although where the good laws may impede the good uses, to take the data on who lives where, that an insurer may have, or indeed a government entity or some other commercial enterprise knows with real granularity. Yoshi, they know where you live. They've got a picture of your house. They have that. Now let's assume there's a disaster and there's a massive flood taking place, and they're trying, was discussed with regard to how sophisticated the Philippines have been in this area. They know with real precision who is about to be flooded or who was flooded. Well, can you share that data about where Yoshi lives with the Red Cross so that they can deploy their teams or a government disaster response unit to go to a place to help you and all your neighbors, because we know that neighborhood is flooded, but it's personal data that's being transmitted to other people, shared. That it could arguably be illegal in within a country, let alone what if it's a region? What if it's several countries that have banded together, and so this data is being shared on a cross-border basis? So this is where, again, very proper concerns in terms of data privacy and what can be shared and when it can be shared, but it can also curtail the use of data for some other very, very good uses.
Thank you, Bill. Thank you very much. Very profound question. If I agree on, I'm already flooded and my house is totally damaged. There's no use to get my agreement. I hope somebody help me. Okay. So now, thank you so much for our panelists and very active participation from audience. So what we have learned is data value change. Oliver, Svenja and others mentioned is what we have learned from that report. And Philippines, exemplary, or sorry, also government take a lead in this area, but still we are very initial stage, as we have discussed, as Alex stressed, quality and the amount of the data are extremely important, and granularity, accuracy, which is not well established. And the privacy issue, as Bill mentioned at the last moment, it's also critically important. How do we make best use of very important data, or taking into account the right consideration of privacy is extremely challenging. So anyway, thank you so much for very much interesting discussion, and we hope that we can continue this discussion in coming days and years. So we conclude this panel discussion, and just Peter, I just return to you. Thank you.
Thank you so much, Yoshi. And I mean, not much to add from my end. I'd like to really thank everybody, the speakers, panelists, and everyone who joined us today for this meaningful discussions. May you all have a good day or evening ahead, depending where you are. And thank you very much for joining. And the recording, by the way, will be put up on the website later. So you can also watch again this wonderful webinar from today. Thank you. Have a good evening.
Thank you. Goodbye. Thank you.